Welcome to FMH Insurecast, a podcast created by Farmers Mutual Hail designed to deliver expertise and insights from trusted FMH team members and industry experts. Each new episode will dive into new products, industry updates, and innovative solutions. Let's get to today's topic.
Hello, everyone. Thanks for joining us today on the FMH Insurecast. Today, we're talking about what the future of crop insurance looks like, how the landscape is continuously changing, and what some of the trends are that we perceive for the future that will affect the decisions farmers will make when choosing their coverage. And happy to have once again on the show with me today, Ken Ripley. Ken Ripley, go ahead and say hello.
Hey, everyone. Ken Ripley, Regional Sales Manager for Northwest Region of Farmers Mutual, and always fun to be on here with you, Ryan.
Perfect. Thank you very much, Ken. Ken, you know this, but before we get started, wanted to share a quick personal note. The theme today is looking ahead to the future. And before we dig in, I've got something to share with our listeners, which is that this will be my last episode as host. So I want to thank everyone and share some last thoughts from this host seat about the future of crop insurance, but maybe we'll reminisce a little bit at the end as far as how far we've come with the FMH Insurecast as well. And maybe you can interview me, Ken. I don't know. Maybe it's time we pass the mic. I don't know. What do you think?
We can give her a shot.
Perfect. Well, we wanted to get this episode in where it's September 25th. So this is probably going to hit folks a little too late for the 9:30 sales closing date. But we were thinking about how much crop insurance has changed over the last, say, 5 or 6 years, and wanted to take a second to reminisce about where we've come from and how we see the landscape changing. We've alluded to the fact that ECO in particular is the subsidy change on that will have a huge impact on how farmers buy crop insurance. But maybe from even broader standpoint than that, Ken, I think we should touch on how we see crop insurance going for farmers over the next few years and the things that they'll need to look out for. I think it's especially important when we enter into an environment with lower prices that we really understand our risk management options and how they've significantly changed in recent history. So, go ahead, Ken.
I was going to say, yeah, absolutely. I mean, there's from the years that we've been doing this, the discussions we've had to where we're at now on products has just changed, greatly. There's no question, like you mentioned earlier, ECO is going to have a major impact on buying decisions going forward with the subsidy change. But even looking forward to, and we'll touch on here a little bit, some new products that will be coming even for 25 that'll change the landscape even more. So it's an exciting, I hear from agents sometimes they get program or product overload, but the reality is in most cases, all these things are more beneficial for the producer and something that producers need to take the time and understand and see if it fits their operation. Some cases it won't, but in many cases it definitely provides that value that they need, especially in these troubling downturn commodity prices.
Yep. 100% agree. And, we're talking about the future. So much has changed. Maybe the one thing I'll just start off with, I'm sure I'll end with it too, is the same old, and not looking at what our new options are is probably leaving dollars on the table. We really need to take a look at these programs, both on the crop insurance side and with the FSA programs, as both of them will be very important for farmers going into the next few years. So I just highlighted a few things that I thought we have been seeing and we will see more of. And I think we could discuss each one of them. One of them is very obvious. We probably beat this to death a little bit on here, but there's going to be more area plans and there's going to be more area endorsements. And when we're talking about there, that would be your ECO, your SCO, your margin protection. Those would be the main ones, stacks for a cotton. Those types of plans have increased in popularity significantly. Not necessarily because they're area plans, but because they're high-level, high-subsidy plans. Would you say that's the same for you up north there, Ken?
Yeah, absolutely. There's no question that those are the big drivers, and gaining popularity. I was doing some look back here this morning. Just shocked at the amount of growth. Kind of focused on ECO, for example. 2021, first year of that product, there was 2,600 policies written. Now in 2024, we had just shy of 60,000 policies written. So it's just it's changing the landscape, and the same goes for the other area plans, SCO, margin, things like that.
Yeah. And we'll touch on this maybe a touch later, but in the more immediate future, because of the subsidy change to ECO, we could see that policy count number easily doubling or tripling for the 25 crop year. SCO might actually be going backwards, but that's because the FSA programs, particularly Arc County, looks more attractive. But um, definitely a couple of trends to pull out there. And then I think you can tell me if you agree with me or not here, Ken, but I think with the opportunity to grab some very high end coverage, that's still not, we're still not talking about $2 or $3 an acre. You're still talking $10, $15 an acre. I do think we see some farmers opting for these higher end area plans and maybe backing down a level or even two on their underlying plan to help pay for that bill. We're raising our trigger. We're relying on the county to do so, but we are paying for our ECO coverage is really main one here through buying down on our underlying plan. Do you think you'll see a lot of that as well?
I definitely do, especially as I get into on my region, some of the western states, just when the underlying multi-peril costs are just, the rates are just higher just because of, history and some of the losses that have occurred there. Gaining those higher triggers has worked well in the last few years, and I just don't see that changing a whole lot. And especially as growers get more comfortable with that type of a mix, I 100% agree that we're going to see a shift in some of that buying habit.
Yeah. So yeah, we do expect that both looking back and for the next 12 months, we'll see that trend, right? We'll see more area plans, particularly ECO. We might see a little bit of a pullback in the underlying plans, but a lot of the rest of these topics are really hinging upon our farm bill and their lack thereof in terms of the farm bill. So we're here at the end of September. There's still a few rumblings out there that we actually might get a farm bill done before the end of the year, but still seems like it's more likely to get an extension and then try to tackle it again in 2025. But because of those things, there's some hints in the farm bill. We've discussed them on the podcast before about where this policy might be going. One that I think is definitely important, not only whether there's changes to it or not, would be the ARC and PLC programs. We're in a lower price environment. Those programs tend to help farmers more when we're in a lower price environment, and particularly when we're coming off of a higher price environment. So the ARC and PLC programs, as they are, assuming we have them as they are for 2025, because that's still not been extended yet, they will be very important programs for farmers to understand. And we're not just talking about corn and soybeans here. We're talking about all of the different crops. And some of them will be slam dunk Arc County, some of them will be slam dunk PLC, but all of them have a much higher potential to pay in the next couple of years than they have in the past.
Yeah, absolutely. I've done some looking back here, even just in 2024, with that, actually that part of the farm bill that lets us increase our reference prices to 85% of the previous 5-year average. We saw a movement up for our programs. For example, corn this year with our spring price of 485. Actually, with where 2023 landed, we're going to see 25's price even go higher, up to $5.06 as the spring price, if we'll call it that, for ARC.
Mm-hmm.
And soybeans, we're going to see that jump, quite a bit. That's going to go up to $12.20. And I did see wheat's going to go up a little bit to 627. So it's no question the decisions at FSA, short term probably are leading towards County ARC as the better of the two. Wheat will probably be the bigger question. It's still part a bit of a spread between the ARC and the PLC price, but there's no question that at least for 25, it's looking like the ARC is going to be the better selection as we see some downturn in prices from an actual commodity price standpoint. So definitely takes maybe one of our tools off the table, that being SCO. If producers decide to go county ARC, but it's as if with my farmer hat on, with my knowing how tight things are getting in the marketplace, having these tools both at the FSA and through crop insurance, it's definitely something that we need to pay a lot of attention to for this year and the coming years.
Yep. So just two other quick notes on that. The most important piece here is just understanding those programs and making sure that you're taking as big advantage of them, because there are dollars that are going to be out there. The second piece being is that as we look to what has been proposed in the Farm Bill, it's enhancements to these programs, whether it be through higher levels through ARC County or higher reference prices. And I know the reference price piece here has actually been a hang up and one of the things that's stopped the Farm Bill from moving forward. But in any case, I think you're looking at, if anything, enhancements to those programs or them continuing on as they are at the very least. And even if they continue on as they are, there's still dollars that are going to be out there for farmers.
Yeah, absolutely.
So on top of that, my next bullet here I have is just the constant conflict of SCO and the ARC County program. Again, crystal ball, looking at some of the proposals of the Farm Bill, there's some out there that would increase the subsidy on SCO and increase the level on SCO, say up to 88% or 90%. So SCO today is a 65% subsidy. Some of the proposals involve going from 65% up to 80, and then increasing the level from 86 up to 88 or 90, right? Obviously, that would be an enhancement to the SCO program. On top of that, though, if they're moving that level up for SCO, they're going to do the same for ARC County. So they're always going to be in conflict with one another. ARC County is a free program at FSA, different prices, slightly different yields, but same concept of an area base of coverage. But the ARC County program, of course, is free. SCO is not free. But if you increase the level of subsidy on SCO, it becomes an even more attractive rate. It aligns with the farmer, what they planted better, because we're going off planted acres versus base acres. It's not going to be an easy choice, and it's going to be a harder choice if we move to a higher subsidy on SCO. So those two will always be in conflict. As long as those two exist together within the Farm Bill, and you can't have them both, there's always going to be ARC versus PLC question. And Ken, I know you're very familiar with deciphering this, and you've dug into these programs as well. Look into your own crystal ball and tell me what you see with what's happening with ARC and PLC, or excuse me, ARC and SCO in the future.
Yeah, so I think a lot of that from kind of where you land in the nation too, as far as what's your underlying multi-peril rates cost, really is going to also drive that decision. I farm in southern Minnesota, so we're pretty lucky that our multi-peril rates are fairly low. So it definitely tends to lead more towards the ARC County decision. But as I get out, say for in the Dakotas, where we have a higher rates, the SCO, it's a true balancing act. You got to look at, especially when we can put our private endorsements on, like SCO Plus, where we can make that individualized coverage. There's no question that it's not a slam dunk decision across the entire nation on these now, especially when from a cash flow standpoint, SCO, if you have that's going to pay in June for a producer, where ARC County's paying in October, November at FSA. So they also have to bring that into play too, as far as cash flow from an operations standpoint. But that conflict between those two is not going to change unless they really change the Farm Bill and just make it really exciting for us in the crop insurance world. We'll see.
Yeah, most definitely. You hit on something there, Ken, that I think is interesting. If you look here at, say, Iowa, the I states, Iowa, Illinois, Indiana, we're going to tend to have fairly low multi-peril rates for, say, your 75, 80, and 85% levels. And of course,
Mhm.
southern Minnesota would be included in that, and some of the other fringe areas of the I states as well. Um, but on top of that, you also have typically base acres on your FSA programs that are more closely aligned with what
Mhm.
your planted acres are year over year. And when you expand out further into, say, the Dakotas and Missouri and Kentucky and Tennessee, and Michigan and all these other places, the base acres don't line up as well. And on top of that, the increase in the multi-peril rates to go from 75 to 80 to 85 probably lend itself more to SCO over the ARC County programs the further away you go from the I states. Is that
Mhm.
fair?
Yeah, that's absolutely fair. I mean, and I think a great call out would be, for producers to truly take a look at their recap of what they have for base acres per crop, because you may be planting a crop and the base for that crop, with County Arc, just doesn't give you much of a safety net, where you're better off to put it where it's individualized, where it's based on your APH as far as SCO for the coverage you get. Obviously it's still a county trigger, but you've got it matched to the acres you're planting. So yeah, great call out on that. I 100% agree.
Perfect. Okay, this one's kind of exciting, Ken. I think we touched on this in the ECO podcast where we talked about the new subsidy, but there's also a new program coming out for 2026. I can hear some groans and moans out there from
Yeah.
people listening in, but for 2026, there will be another top end option called MCO, which stands for Margin Coverage Option. Again, that is a mashup between ECO and margin protection. And so it has some features of both, but it's a band of coverage like ECO, but it's sold in September timeframe, and it does include some input costs that go into the calculation for a payment. But I think when we look at what that might look like a year from now, when we're going to be selling MCO, the big question is, do we buy MCO now, or do we wait and buy ECO in the spring? And so I think those will also be in constant conflict with one another and determining whether we're an MCO fan or an ECO fan, or if we have strategies or maybe even marketing plans that are built around one or the other will be important. But high level, we haven't seen rates yet. We've barely seen provisions on MCO, but high level, assuming they work fairly similarly to what we understand, what do you think about that conversation that's going to be happening in the next 12 to 18 months?
Yeah, quite honestly, I wish it would have came out this year, because, some of the things that MCO brings, it all, kind of gets rid of our issues with margin. I mean that's probably the bigger thing for me, Ryan, is making it a cleaner decision, not having the offset, and if there's a loss, your revenue policy can wipe out your margin loss. I just think it brings simplicity to the policy. There's no question that it's going to be, do you like the September price or do you like the February price? That's going to be an individual decision. But the nice thing is, everything we're hearing, they're going to have the same subsidy on both. So it's going to make it more of, what I want to lock in, what is my crystal ball? And that's really what it's going to come down to. But not having to worry about, with margin today, have the, concern or the potential for your individual loss to wipe out a margin loss, where ECO may have a full payment in the spring. Those concerns go away, which I think is a big win for a fall, or September price purchase.
Perfect, perfect. Yeah, that will be an interesting one. Um, Certainly another one of those things, as a farmer, as an agent, you need to know it. You'll need to know it come, say, next July and or August, and you'll have to know it pretty well because it's gonna be a hot topic next summer. So,
Yes.
Ken, you might disagree with me on this next one, so I'm interested to see what you have to say. I I think this is my personal opinion. I think we will see a slow migration away from hail and wind policies, not completely, but maybe taking away some of the dollars, or maybe we're only buying hail instead of the wind, or a deductible or something, simply because we have so much value that's in these top end products that it feels like we can't leave them on the table. But it might also mean that our budgets shrink for the rest of whatever we want to buy, whether that be hail, wind, replant, any of the other named perils. I just see farmers looking to take advantage of these highly subsidized dollars. And in order to pay for that, if they don't want to increase their, insurance bill significantly year over year, that they would maybe pull back on some of that hail wind replant. What do you think about that, Ken?
Yeah, I think actually where I'm located, that shift has already started. We've
Okay.
seen, quite a bit already of folks going with the 95% multi-peril, the ECO, in the past for us ramp products like that and just foregoing the wind and hail. Again, that's not across the board. There's definitely areas where, the perils of wind and hail are just, more often than not happening that you just can't go without. But you know, my farm, I haven't had wind or hail on my farm since we've had some of these endorsements available. So I'm already in that trend. So I don't disagree with you. And it's again a farm-based decision. What are your biggest risk? And for me, typically it's drowned out and it's price drop. So that's where I wanted to put my premium dollars. So I 100% agree with you. I
Oh
can't
no.
disagree with you.
Well, I'm sure somebody does.
Yeah.
But I will say there is some regionality, or geography to this as well. So the further west you go tends to be more hail and wind are a bigger
Hmm.
issue, and putting money into that bucket might seem more advantageous than putting it into an area plan.
Yeah.
Um, but
Yeah.
then again, as we move further west, it's been a trend in the industry that the rates, the options that are available in states like Nebraska, Kansas, and Colorado, um, not unrealistic to see rates going up or plans being taken away just simply because losses have been heavy. And that's
Yeah.
that's not necessarily an FMH thing. That is an industry thing.
Yeah.
Um, so it's one of those where those folks out there probably might be more quick to disagree with putting money into the area plan bucket versus hail and wind, but they may also see a shift in what they determine the value to be if rates would increase as well.
Yes. Yeah.
So,
Yeah. Frequency of loss out there is, probably drives the decision towards those products, and that may not change. Unfortunately, just the rates of those products may change those decisions.
yeah. I got one more bullet on here. It's just more about, taking advantage of these options. These options being added in here make things more complicated, but they're also better deals for the farmer. So I think in general, if you're ignoring these, or if you're not digging into them enough to understand, maybe I want to grab SCO here, but not over here. Or I'm going to do ECO in one county and MCO in another, or something. There's a lot of ways to take advantage of these programs, but any thoughts from you, Ken, on either any of these programs, how you look at taking advantage of them, or any other insights into what you see the future of crop insurance and risk management looking like?
Yeah. Actually, I'm going to say I think you're a great lead in for me to put a plug in for our new quoting system that's coming in November. Because, I mean, there's no question there's more options, complication, things like that. But there's tools. I'm proud to say that here, and hey, a big thanks to you, Ryan, with your involvement in it. Our new quoting system, FMHQ, will roll out in November, and that tool will help you make some of these decisions with some look back features. So I think that helps simplify, or at least give you a little bit of a crystal ball of what if I would have done this in the past type of information. So yeah, the decisions don't get easier, and I don't see that changing unless there's something major changing to the farm bill, which, as we do this podcast, I'm guessing there's going to be a delay. So
Extension, hopefully, right? Just an
extension. Yeah, just
extension.
an extension. Please have an extension. Don't let it
Because
expire.
we are making a lot of assumptions here today that we're going to have the ARC and PLC programs in 2025, but in reality, technically, none of them exist yet.
Right.
Um, so, I keep looking out at FSA's website for some updated information because the marketing year ended on September 1st, but I keep forgetting, well, they're probably not going to update anything in here until these programs actually get renewed. So anyway, we can calculate a few numbers manually out of there, but FSA program has not released anything of importance for 25 unless they've done it in the last couple days. Um, Long and short of it, Ken, with all of these future changes and what other unknown changes we don't even know about yet, with a farm bill always comes an extra dose of change. Um, be sure to check out all the training opportunities that FMH offers. Obviously, we have update meetings, but we also have webinars. The FMH Insurecast is not going away just because I'm not going to be host anymore. So all of those resources for um, uh, these programs and others, please take advantage of them. There's a lot to learn. I guess maybe that's the point we're trying to get across, is that there's a lot to be learned, and resting on our laurels or rolling over policies from year to year is probably going to leave dollars on the table for farmers. Um, Ken, thank you for being one of my go-to guests. I love chatting crop insurance with you. Do you have any questions for me? Any comments on what we've talked about today?
Yeah, first off, just want to say it's been an absolute blast the last few years, and always look forward to being on these with you, and appreciate your insight and your just pulse on top of what's going on across the nation. I think you've got a natural gift to that. So we're sad to see you go. Unfortunately, you're leaving the FMH family, but you're not leaving FMH, knowing that you're going to the other side of the business to be an agent. So we look forward to continue to work with you there. But I do have a question for you. So of all of these, what has been your favorite podcast memories?
Um, I think honestly, the one I always go back to is the very first episode that we did. And it was unique in a couple of ways. One, it was during COVID, and I remember, I don't know exactly why, but I recorded it from my parents' basement, which was interesting. But then on top of that, that first episode was about ECO. It was about the fact that this new ECO program was coming along, and we'd done a little bit of research running into it, and we had some really good numbers about what we expected payments to look like for all these counties. And I just remember it being an exciting time because we could see something brand new that we could go out there and sell. And now you could see that that same excitement has spilled over into the last few years of doing this. But that's really what this comes down to, is us hunting down value for agents and farmers and spreading the word about that. So that's probably my favorite memory.
Yeah.
On top of doing some live recordings that we did at the National Agent Summit, which was in Kansas City in 2022, I believe. So that was fun as well. Doing those in a live setting was something interesting. But how about yourself, Ken?
I have, and I apologize, I can't remember which topic it was, but still one of the ones that I remember is one of our first video recordings. And, some of the listeners may know Zach Galifianakis show, Between Two Ferns, and we were around one hosta, if I remember right. And so we got a really good laugh about, we should rename our live feed as Round One Hosta, but it was yeah, just really have enjoyed every one of them. I mean, everyone's been
Yep.
fun. I mean, we've you've had some great guests on too, and I just always enjoyed, whether I was on or not, listening to the podcast and getting insight and trying to improve my crop insurance knowledge, or just broaden my palette. So thank you again, Ryan, for all you've
Yeah.
done.
No, thank you, Ken. You're always the go-to guest here. So I love bouncing ideas off you. And from talking with folks out and about, they love your farmer's perspective. So I don't think you're going to lose that anytime soon. So I'm sure folks appreciate that.
Thank you.
But anyway, thank you, Ken, and thank you all of our listeners. The show will go on. It might look a little different, but look out for some important crop insurance news and updates on future episodes. Be sure to subscribe to this podcast on your favorite podcast app, and make sure to follow us on YouTube, where you can find our recent episodes as well. But I will sign off for now, forever, I guess. Maybe they'll have me back. I don't know.
Hey, yeah, we should bring you back as a guest on in the future. That'll be fun to kind of turn the tables. So
There you go. Perfect. Well, thank you, Ken. Thank you, listeners, and you'll hear from the FMH Insurecast again soon.
You've been listening to FMH Insurecast. We appreciate you joining us today and would like to hear from you. If you have questions about today's topic or an idea to share for an upcoming podcast, you can contact us at fmhpodcast@fmh.com. Thanks for listening. This podcast is intended for information purposes only. See policy provisions, terms, and conditions for details. Products underwritten by Farmers Mutual Hail Insurance Company of Iowa and its affiliates, West Des Moines, Iowa. Farmers Mutual Hail is an equal opportunity provider.